Preparing for a tax consultant at Deloitte interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to work as a tax consultant at Deloitte? I'm interested in Deloitte because tax consulting combines technical rules with real business decisions. Deloitte's scale means I can work with complex clients, cross-border issues, and technology-enabled compliance, not just prepare forms. I also like the apprenticeship model, where I can learn from managers while contributing early. My strengths are research, structured analysis, and explaining technical points clearly, which fit the day-to-day work of a tax consultant. While answering, focus on Deloitte's client exposure, tax technology, learning culture, global network, and why tax advisory fits your strengths in analysis, detail orientation, communication, and business problem solving. Question 2. Walk me through how you would approach a new client tax engagement. I would start by understanding the client's business, entity structure, filing obligations, and the exact scope of our engagement. Then, I'd review prior year returns, work papers, notices, and planning memos to identify recurring issues. Next, I'd create a document request list, track open items, and flag unusual transactions for senior review. Throughout the engagement, I'd communicate status clearly so the team can manage deadlines and avoid surprises. Make sure to cover understanding the client's business, confirming scope, gathering documents, identifying key tax risks, using prior year work papers, coordinating with the team, and communicating open items professionally. Question 3. What is the difference between tax compliance and tax advisory? Tax compliance is about accurately meeting legal filing obligations such as preparing returns, calculating tax provisions, and submitting reports on time. Tax advisory is more forward-looking. It helps clients structure transactions, manage tax risk, and evaluate alternatives before decisions are made. In practice, they overlap. A compliance review may reveal planning opportunities, while advisory work must still be defensible under tax law and properly documented. In your answer, talk about compliance as meeting filing and reporting obligations, advisory as planning and decision support, and how Deloitte consultants often connect both through risk-aware recommendations. Question 4. How would you explain deferred tax assets and deferred tax liabilities to a non-tax client? I'd explain deferred taxes as timing differences between accounting income and taxable income. A deferred tax liability means the company will likely pay more tax later, often because tax depreciation was faster than book depreciation. A deferred tax asset means the company may reduce future taxes, such as from net operating losses or reserves not yet deductible. The key is whether those future benefits are more likely than not to be realized. Be sure to mention temporary book tax differences, future tax benefits versus future tax costs, examples such as depreciation or net operating losses, and the importance of valuation allowances. Question 5. What steps would you take if you discovered an error in a client's prior year tax return? First, I would not jump to a conclusion. I'd verify the facts, quantify the potential impact, and compare the issue against materiality and applicable tax rules. Then I'd escalate it to my senior or manager with clear documentation, not directly promise the client a result. The team would assess whether an amended return, disclosure, or prospective correction is required. My role is to be accurate, transparent, and professional. While answering, focus on fact-gathering, materiality, escalation to senior team members, researching filing requirements, documenting conclusions, considering amended returns, and maintaining professional integrity with the client. Question 6. How do you stay organized when working on multiple tax deadlines at once? I use a deadline-driven tracker that shows each return, deliverable, owner, missing item, and review status. I prioritize based on due dates, complexity, and dependencies, because one missing K1 or trial balance can delay an entire workstream. I also communicate early if something may slip, instead of waiting until the deadline. During busy season, being organized is not just personal efficiency, It protects quality and team capacity. Make sure to cover prioritization by deadline and risk, tracking open items, proactive communication, calendar management, quality checks, and knowing when to ask for help during busy season. Question 7. Tell me about a time you had to research a complex tax or accounting issue. In a class project, I researched whether a transaction should be treated as ordinary income or capital gain. I started by identifying the exact fact pattern, then reviewed the Internal Revenue Code, regulations, and secondary explanations to understand the rule and exceptions. I summarized the analysis in a short memo with citations and a recommendation. The key lesson was that good research is not just finding rules, it is applying them to facts. In your answer, use a clear star structure, emphasizing how you defined the issue, researched authoritative guidance, evaluated alternatives, summarized findings, and communicated a practical recommendation. Question 8. What would you do if a client pushed for an aggressive tax position you were uncomfortable with? I would handle it carefully and factually. First, I'd ask questions to understand the client's rationale and gather all relevant facts. Then I'd research whether the position has sufficient technical support and discuss it with my senior or manager. If the position is not defensible, we should explain the risk, potential penalties, and alternatives. A consultant should be client service oriented, but never compromise professional standards or firm reputation. Be sure to mention professional skepticism, researching support, escalating internally, considering disclosure standards, protecting Deloitte's independence and reputation, and communicating respectfully without accusing the client. Question 9. Can you explain the basic difference between an S corporation, C corporation, and partnership for tax purposes? A C corporation generally pays tax at the entity level, and shareholders may pay tax again on dividends, creating potential double taxation. An S corporation is usually a pass-through entity, so income flows to shareholders, but it has eligibility restrictions. A partnership is also pass-through, with more flexibility in allocations and ownership economics. Entity choice affects tax rates, distributions, losses, compliance, and transaction planning, so the best structure depends on business goals. While answering, focus on entity-level taxation versus pass-through treatment, shareholder or partner reporting, double taxation for C corporations, eligibility limitations, and why entity choice matters for planning. Question 10. How would you calculate taxable income starting from book income? I would begin with pre-tax book income and then adjust for book tax differences. Permanent differences like certain non-deductible fines or tax-exempt interest affect taxable income but do not reverse later. Temporary differences such as depreciation or accrued expenses reverse over time and may create deferred taxes. After adjustments, I'd consider credits, net operating losses, and limitations. The final number should reconcile clearly from the financial statements to the tax return. Make sure to cover beginning with pre-tax book income, identifying permanent and temporary differences, applying tax depreciation, non-deductible expenses, credits, loss limitations, and reconciling to the tax return. Question 11. What is a tax provision, and why is it important for a corporate client? A tax provision estimates the tax expense reported in the financial statements. It includes current tax payable based on taxable income and deferred tax expense or benefit from temporary differences. For public or large corporate clients, it is important because it affects earnings, the effective tax rate, and investor reporting. Under ASC 740, the team must also evaluate uncertain tax positions and valuation allowances, so both technical accuracy and documentation matter. In your answer, discuss current tax expense, deferred tax expense, effective tax rate, ASC 740 concepts, financial statement impact, controls, and why provision work requires precision and judgment. Question 12. How would you handle receiving incomplete or messy data from a client? I'd first review what we received and compare it to the required format, prior year data, and expected totals. Then I'd identify gaps, inconsistencies, and items that need clarification. Instead of sending vague questions, I'd prepare a targeted request list with examples of what is missing. If a deadline is tight, I'd tell the senior what assumptions may be needed. I would not force unreliable data into a work paper without documentation. Be sure to mention validating data, comparing to prior periods, creating a clear request list, asking targeted follow-up questions, documenting assumptions, and avoiding unsupported calculations. Question 13. What interests you more, tax compliance, tax technology, or tax planning, and why? I'm most interested in the intersection of tax compliance and tax technology. Compliance gives me the technical foundation because I can see how tax rules flow into actual returns and provisions. Technology makes that work more scalable and valuable by improving data quality, automation, and review analytics. Longer term, that foundation also supports better planning advice because strong advisory work depends on understanding how positions are reported and documented. While answering, give a balanced answer that shows openness to learning, but clearly connect your preference to Deloitte's work, client value, data skills, technical research, or business advisory impact. Question 14. Describe a time you worked on a team under pressure. During a group finance project, our model had errors 2 days before the presentation. I took ownership of reconciling the assumptions, while another teammate rebuilt the charts and another rewrote the recommendation. We held short check-ins every few hours and tracked fixes in one shared file. We delivered on time and received strong feedback. The experience taught me that pressure is manageable when roles are clear and communication stays calm. Make sure to use STAR format, highlighting communication, ownership, flexibility, meeting deadlines, supporting teammates, and reflecting Deloitte values such as collaboration, inclusion, and client-focused execution. Question 15. What are permanent differences and temporary differences in tax accounting? Permanent differences are items treated differently for book and tax that never reverse, such as tax-exempt interest or certain non-deductible expenses. They affect the effective tax rate because they permanently change tax expense relative to book income. Temporary differences reverse over time, like different depreciation methods or accrued expenses deductible when paid. These create deferred tax assets or liabilities. Distinguishing them is critical in tax provision work and return to provision analysis. In your answer, define each clearly, provide examples, connect temporary differences to deferred taxes, and explain why the distinction matters for effective tax rate and provision work. Question 16. How would you explain transfer pricing at a high level? Transfer pricing is about setting prices for transactions between related entities, such as a U.S. parent charging a foreign subsidiary for services, royalties, or inventory. The core principle is arm's length pricing, meaning related parties should price transactions as independent parties would. Tax authorities focus on this because profits can shift across jurisdictions. Good documentation, benchmarking, and consistency help defend the policy and reduce audit risk. Be sure to mention intercompany transactions, arm's length pricing, documentation, tax authority scrutiny, examples such as services or royalties, and why multinational companies need consistent policies. Question 17. What would you do if your manager gave you feedback that your work papers lacked clarity? I would treat that feedback as important because work papers need to be reviewable, not just technically correct. I'd ask my manager for 1 or 2 examples of what unclear documentation looked like, then improve the file with better labels, tick marks, source references, and a short conclusion. I'd also apply the same approach to future work papers. In tax, clear documentation saves review time and supports positions later. While answering, focus on coachability, asking for examples, improving documentation, using tick marks and references, making work reviewable, and applying feedback consistently in future assignments. Question 18. How do tax credits differ from tax deductions? A deduction reduces taxable income, while a credit reduces the actual tax owed. For example, if a company has a 21% tax rate, a $1,000 deduction saves $210 of tax. A $1,000 credit generally saves the full $1,000, subject to limitations. That makes credits especially valuable. In client work, it is important to understand eligibility, documentation, carry forwards, and whether credits are refundable or limited by tax liability. Make sure to explain that deductions reduce taxable income while credits reduce tax liability directly. Include a simple numerical example, and mention limitations, carry-forwards, and client planning relevance. Question 19. How would you prepare for a Deloitte client meeting where you are the most junior person in the room? I would prepare by reading the agenda, prior memos, open items list, and any client background available. During the meeting, I would listen closely, take structured notes, and capture action items, owners, and deadlines. If I had a relevant question, I'd raise it at the right time or ask my senior afterward. As a junior consultant, adding value often means being prepared, accurate, and making follow-up easier for the team. In your answer, talk about preparation, understanding the agenda, reviewing background materials, listening carefully, taking notes, tracking action items, and contributing appropriately without overstepping. Question 20. What makes a strong tax consultant beyond technical knowledge? Technical knowledge is the baseline, but a strong tax consultant also needs judgment, communication, and ownership. Clients do not just want code citations. They need clear advice on what the rule means for their business. Attention to detail matters because small errors can create real exposure. Curiosity helps with research, and ethics guide difficult situations. The best consultants combine accuracy with practical thinking and dependable client service. Be sure to mention communication, judgment, attention to detail, curiosity, ethical standards, teamwork, project management, client service, and the ability to translate complex rules into practical business advice. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.